One of the big reasons people attend BiggerPockets convention is to get an overall outlook of the current market. To listen to some of the experts, whether it's real estate agents, whether it's economists, whether it's brokers, professionals across the country, and get the best data and the best, really, opinions across the country. So this week, a big common theme that we've been hearing is now is still a good time to be investing. Maybe some people have pulled back for whatever reason, but the experts are still buying. And I want to go into a couple reasons why. First thing, and that's what's on everybody's mind, is interest rates. So interest rates have been rising. That's what's made a lot of people pull back. A lot of markets have cooled off because of this. Interest rates have been much higher than this. If you look back in the 70s and 80s, interest rates were like 10 to 15%. And people were still buying, and people were still making it work, and people were still making money in real estate despite those higher interest rates. I'd say the last 5 years, we've been in this really low interest rate environment, especially the last 2 years where we were like 2 to 3%. That is not normal historically. So now we're really actually just starting to push up into what normal rates look like, 6-7%. Historically, that's really not that bad. So what a lot of the experts are doing, they're still buying, but they're just underwriting their deals and making sure that they work on a 6% or a 7% interest rate. And if it still pencils, they're going for it. Because you know what the other thing is? If the deal works at those interest rates, well, a lot of people are saying interest rates are, yes, they're going up, but they should settle out. Maybe it's going to be a year, maybe it's 2 years, but when they do settle out, they can go refinance, and then their numbers are going to look even better. So the second thing a lot of people have been talking about is inflation. How is that impacting everything? So there is a ton of data. If you show how inflation over time and you show real estate prices over time, it is incredible how close those curves and how much those trends match each other. So one of your big hedges on inflation is to buy real estate, because again, your real estate should keep up with it. Another aspect of inflation is quantitative easing. So this is what they call all the money that's been put into the economy over the last 5 to 10 years by the US government. And this quantitative easing has created even more inflation. But what it's done for real estate investors, and I bet a lot of people have felt this, because if you bought a home in 2010, 2012, say 10 years ago, that home is probably worth a lot more money today. And a big reason is quantitative easing, because the more money that's put into the economy, that it creates inflation, but that is actually inflation in real estate. Values have kept pace with each other, so that's actually helped people. So a lot of people, again, are scared of quantitative easing, but if you're in real estate, that's actually helping you. So if you still get in to real estate and buy now, if inflation continues to go up, you can keep up with it with real estate. But if you also, on the flip side, if you choose not to invest now, and you just keep your money in a savings account or wherever you might keep it, maybe under your mattress at home, that money is going to lose value. If you're not putting it into real estate or another investment, that money is, especially in inflation times, that money is losing money. That money is going down even more rapidly. The third thing is the overall economy and a potential recession looming. So today, we got to listen to a really smart economist who has tons of data and really looks deep into this stuff. Her outlook was actually really surprising. She really doesn't think a true recession is coming until potentially 2025. And in her opinion, we're probably not headed for she thinks that actually we're going to have this soft landing over the next year and then start to kind of get back into a normal economy. She did say that, hey, if our government really gets too aggressive on raising interest rates, then that could create a longer recession. But her opinion was that doesn't happen until 2025. A big fundamental part of her thesis on the economics and why it should be a soft landing is consumer spend. So if you look at consumer spend, people are still spending money. Even though people feel like, oh, we're in a recession, we've had back-to-back quarters of the lowering of GDP. If you look at consumer spend, it is still growing, and they're still not making enough houses. So those key factors should bode well for the real estate industry. So with all this data and all this market analysis we have, this is helping us to make more informed and educated and calculated decisions in our business. Probably my big thing is we want to continue to ride the wave of appreciation and of, if it's going to be inflation and house prices potentially continue to rise, we want to continue to buy, because again, over time real estate continues to appreciate. So let me leave you with this perspective. If you look at real estate holistically, zoomed out from a far view, if you look at prices over the last however many years, let's go say last 30 years, things continue to rise. So even if you find these little intervals where things might be dipping, real estate is a long game, and if you can continue to play the long game, prices will continue to rise, and your asset and your net worth will continue to rise. The only way it doesn't continue to rise if you're not in the game. So if you can get in the game, buy properties, stay in the game, even if you make mistakes, even if you have a short-term big correction, things will come back. But if you stay in the game and stay in there over a long time, you will continue to create generational wealth.